Hey everybody, good morning. Welcome to a new episode of Stocks for Breakfast. My name is Pete Renzulli. Thank you so much for joining me today. We're going to talk about which stocks to be buying today. We're going to talk about the market. We're going to talk about short covering rallies today and the difference between a short covering rally and new buying, which is pretty interesting. We're also going to answer a question from the community about order flow and tape reading. It's probably one of the most common things that we get asked, quite honestly, because I talk about it all the time. And what's the difference between the two? So we're actually going to dive into those two things first. So stick around. We'll be back in just 1 second. Okay, so obviously with everything we discuss here, it's for educational purposes. It's up to you to make that final decision. Hopefully, if our mission is fulfilled, we're helping you make better decisions that you have conviction in before you buy stocks. So I just want to say hello to a couple of people here this morning. Gus, nice to see you. If I remember, you're in San Francisco in the Bay Area, if I remember right. Gary Homer, good morning. Good morning. John Bates, a losing battle, going to try and wake up earlier than me every morning. I don't know. I used to own a deli, so we used to wake up pretty damn early. So you gotta set that alarm earlier and earlier. Let's see. Ross Marshall, good morning. How are you today? Where's everybody calling in from today? Sapna Hedge, good morning. Foolish Niles, good morning. Good morning. Let's see. Sean Fisher, pockets of opportunity. Cash is a position as well. Yeah, we're actually going to talk about that a little bit when we discuss the markets today and the bigger picture. Actually, we're going to discuss position sizing. Hey, Catherine Goodson, good morning. Good morning. Carlos, Gerald, good morning. Tom up in Syracuse. May I tell you, Tom, we're actually hoping that we could probably get up there. My dad actually has a cabin that he bought like in 1980 or something like that. And there's nothing, I don't think there's anything more beautiful than driving the New York State Thruway north towards upstate New York in like late October and November, where everything is changing and you got basically like every single color you could imagine. It's pretty amazing up there at that time. Let's see, Mel. Hey, Mel, good morning. Thanks so much for joining us. I appreciate it. Milky Fade, East Central California. And Hank, good morning, Hank. Appreciate you being with us today. Ross Marshall in DC and Shane. Oh, it's pretty already. Yeah, I got to tell you, it's a beautiful area up there. I hope that we can take a couple of days to go see that. Good morning, Ruby. How are you today? From Vegas. One of our members of our community, Joe, is also from Vegas as well. So we're actually going to take something. I want you to screenshot this because I actually want to bring up something. We get a lot of questions. I want to say about maybe a couple of weeks ago, we did a lot of work on trend lines. If you want some of the videos, there's more videos below in the description. I'm going to put this up on the screen now. You can take a snapshot of it. It's the chart of the SPY ETF from yesterday on a 5-minute chart and how throughout the day, from a day trading perspective, I was working the charts, finding the best spot to be a new buyer yesterday before I started to buy stocks. When the trend changed, when it changed again, and then ultimately how we took advantage of the move at the end of the day. So I'm going to give you this. You can take a snapshot of it. So you can see actually first part of the day, we actually opened up higher. And if you remember a couple of days ago, we had mentioned that we usually look for the first push of the day to be the high or the low of the day. So the SPY actually opened here and pushed lower, and there was really no reason to get long yet until we saw some confirmation. This gave it a shot here, but that would have technically have been a potential change of trend. So it would have needed to have broken that level, and that was the previous low. But we went out a little bit deeper because this failed and the market internals just weren't perfect at that point. So we ended up breaking the trend line here. This was the low. This was where we broke. So over here, right around noon. And what's super interesting about this is, I don't know if I remember if I mentioned it on Wednesday or not, but we've spent quite a bit. If you want to snapshot that, please feel free. We spent a lot of time recently, especially myself and Chris Ferris in our community, about how the market used to be where, you know, especially if you were day trading, it was kind of common where you would leave actually at 11:30. You'd go and take a break, and pretty much from 11:30 to 1:30, you know, you were kind of done. You never felt like you were missing anything. And if you don't happen to know, I had a trading firm in New York City. We had about 300 people worldwide. But at one point when, and this is actually kind of getting into the question we're going to answer today about order flow. At one point, they changed in February of 2007. The New York Stock Exchange changed their order from a super dot system, which was where the specialists stood at their post all day and pretty much managed most of the order flow that went through those stocks. Things changed when they went electronic, and they went to what was called a hybrid system, and it became, at that point, it became super montage, and a lot more electronic orders came into the market. And there's a whole point, because I want to get to the question, and I want to bring it up because the question is, what's the difference between order flow and tape reading? So we're going to answer that, but I want to give you the context of how we came up with the New York method, which is actually what we're, kind of our core method, our core system of how we look at everything. It was born out of when the New York Stock Exchange changed that. If you could imagine you're a specialist on the floor of the New York Stock Exchange and you had a limit to the amount of electronic orders that you can be hit with at one time. And at that time, it was 1,099 shares every 30 seconds on one side of the market. So let's just say, for argument's sake, I'll just use this as an example. Say this is my specialist post. I'm standing on the floor of the New York Stock Exchange, and I have IBM as the stock that I'm a specialist in. And people sitting at their desk or anywhere really electronically could only buy a maximum of 1,099 shares every 30 seconds on one side of the market. So you could buy 1,099 shares electronically, but that was the maximum I could get hit with. So it gave me time to manage the positions. On one side of the market, I could buy and sell quickly, but that's different sides of the trade. So if I bought 1,099 shares, I was kind of okay that I wasn't getting blasted electronically. And this is 2007, up to 2007. It's not that long ago. I'd have to wait 30 seconds in order to hit that manually again. So the specialist was kind of in control of the order flow. They could wait, that kind of stuff. They also had the specialist book where all of their orders were, where we were electronically trading with it. When the hybrid system came in, that same 1,099 order became unlimited. So it went from, yeah, I'm in control of everything, to what the heck is going on? This is impossible. So those specialists came off the floor, and I actually had 25 of them trade in my office at one point. And that's actually how we came up with the New York method. I was a momentum trader trading mostly NASDAQ stocks at that time. They came off the floor. We taught them how to trade on a computer, because if you could imagine being on the floor of the New York Stock Exchange, none of them hardly used computers. Most of them was the roar of the crowd, the crescendo of the buying and selling, and everybody yelling. If you could, you could picture the floor of the exchange being crazy. So that's how we started to combine order flow with momentum. And tape reading is a little bit further into that. So I'm actually going to bring up the question that was asked about that. And it came from the community. So these questions are kind of awesome. So we're actually going to talk about this. Termo88 last night asked, long-term viewer and subscriber and a big fan of, thank you so much. I want you to know how much I appreciate that. So what I want to get over here is the pillars of your trading strategy. Keep reiterating, emphasizing, and drilling into our heads, reading the order flow and reading the tape. Okay. I'm still not 100% clear on the difference between reading order flow and reading the tape. So this is just, it's an awesome question. It really is, because if there's one thing that we try and do, especially obviously in our private community, is that we try and drill in that trading does not need to be complicated, but it needs to be consistent. However you end up looking at the market, it needs to be the same way all the time. And however you end up doing that, whether it's moving averages, trading indicators, whatever you're comfortable with. I don't use any of that. I use moving averages, price and volume, but mostly price and volume. Whatever it is, you need to be consistent, because you need to believe in it. If you have a hard time believing in it, you don't believe it works, quite honestly. You don't believe that it follows through over time. So you need to trade and get feedback. You need to trade and get feedback. And there's an easy way to tell whether or not you believe in your own trading strategy. Raise your hand if you've hesitated to buy a stock when you had a signal. I think we all have at some point in the past, but when you work on your system, again, we came up with the New York method. When you work on that system, you don't hesitate anymore, because you have an exact, if this happens, I'm doing this. If this happens, I'm doing this. See the trade, take the trade. See the trade, take the trade. So if you raise your hand right now, and if you want, you can type in the chat. If you say yes, that you see a signal and you hesitate, that means that you don't believe in your strategy. Because if you believe in your strategy, you expect it to follow through, provided you're actually taking trades that match your strategies. I think we can all also admit that sometimes we take trades that have nothing to do with our strategy, which are those bonehead trades that cause us to not get paid. So the answer, I want to bring this up again. If you want to snapshot this, I'll bring it up so you can take a quick picture of it. And he's really asking this, the difference between order flow and tape reading. So I'm gonna rattle this off, and if you want, you could obviously pause it. And again, it's funny. I have these big Post-it pads in here. This is a Post-it pad moment. These are the kind of things you want to write down. Order flow is the reason you want to find. Order flow is the reason to take the trade. Tape reading is whether you should buy or sell now. So, and building an argument for the trade. Okay. So order flow is the answer to the question, is it obvious? Is it obvious that smart money has been allocating millions of dollars to a trade? That's the question that we need to answer. Now, the problem that a lot of traders have is yesterday. Quite frankly, that's the big problem. They're looking at stocks from yesterday, running those scans, whatever software you happen to use, and like, wow, this stock was up a lot yesterday. But that's it, just yesterday. So if you can imagine you're a hedge fund and you're buying stock, you started to buy stock, you're sending your order flow down to the floor of the New York Stock Exchange or however you end up putting it into your algorithm. You start sending it in, you know you have 5 million shares to buy. And again, this is where the New York method was merged kind of with tape reading and NASDAQ trading, which we did back in the day. You could call it momentum trading, but we prefer to call it tape reading because there's more to the argument. One day is not enough order flow. One day, maybe you could day trade those stocks. One day, maybe you could take advantage of those stocks, but you have to factor in position sizing into the quality and the depth of the order flow. So here's the thing. Pick a side, then pick a spot. Okay, picking a side means order flow is obvious. So you need to answer the question, is order flow obvious and how long has it been obvious? Now, the big thing that should be going through your head right now is, okay, what does that mean? What does obvious mean, right? Well, how long has smart money been spending money for that idea? How long have they been buying that stock? How long have they been committing higher highs and higher lows and paying what? And again, we take technical analysis for granted sometimes, but what does it actually mean that a stock is well bid on the hourly chart, the daily chart, the weekly chart, the monthly chart? Well bid, we take all this stuff in technical analysis for granted because, yeah, look at the chart, right? But what's actually happening, which is why we call it order flow, not the trend. I mean, it is technically the trend, but we want you to visualize somebody actually had enough money to push that. They're paying higher prices. That's what you're supposed to visualize with order flow. So order flow is determining how long has smart money, the deep pockets, somebody with a lot of research, been allocating money to this to the point where they've had to pay higher prices because there's underlying demand for that. Now, if it's one day, that's okay. If it's 2 days, a little bit more, where higher highs, higher lows, you get a big breakout on big volume. That's one day. It's impressive. They stepped up. They bought more money was allocated to that trade. We got a good question yesterday. When is a breakout confirmed? It's not the day it breaks out. It's the next day. Remember, we talk a lot about what do I want to see? What don't I want to see? And how that influences everything that you do while you're trading. You need to have that question in your head all the time because then you'll never be acting out of impulse. You'll be, I know exactly what I'm going to do. What do I need to see? What don't I want to see? So if a stock breaks out, what do you want to see? We want to see that stock go well bid, which means they're holding the bid, which actually brings me to something we're going to talk about in a second. We wrote this piece out today to our subscribers, essentially about what it means to hold the bid and what's going on in the market right now, and whether or not we're actually in a short covering rally the last 5 days when we have been moving to the upside, or is it fresh buying getting ready for a new leg to the upside? So we're actually I'm going to show a screenshot of which you can take a snapshot of as well. So that's what order flow is. Order flow is determining how obvious deep pockets have been allocating money to a stock and how long have they been doing. But here's the key. We did not talk about an entry yet. Okay, that's the thing. Order flow does not mean just get in there and buy. You still have to determine the entry price to the potential reward, and is it worth buying right now? That's where the tape reading part of it comes in. The tape reading part comes in is assessing entry, stop loss, initial profit target, and probability of it getting there. So is it worth taking the risk? Then you throw the stock market power pyramid on top of that, which if you want to learn more about that, there's a link below in the video to click on that one to watch the stock market power pyramid. You're now adding what's going on in the market, what's going on in the sectors, the industry groups, and the individual stocks. So order flow is determining if we should be looking to buy. Tape reading is building that argument to time our entry, determine risk reward, and then allocate position sizing based on the argument that we built while we're reading the tape. So order flow is, should we be looking to buy? Tape reading is determining if right now is the right time to do it, and what is our position size based on how much the stock has recently moved and what it normally moves. That's a mouthful, right? But that's real trading. That's real trading. And if you're struggling right now, if you're like, wow, that sounds like a lot, that means that you're not making enough distinctions. That means that you're not taking your thought process to the next level. That means you might just be like, bull flag, I'm going to buy. Bull flag, I'm going to buy. That's not tape reading. That's chart patterns. And that's what we talk about all the time. Chart readers struggle because they're just looking for those patterns. Tape readers and traders get paid. Tape readers and traders look for money and whether or not they should put their hard-earned money in harm's way by first reading the order flow to determine if smart money is allocating it to an idea, and then if right now is the right time. So we're going to actually go into another one that we're going to bring up, which is we're going to talk about holding the bid. So you can snapshot this one again. I'm going to bring this up on the screen. This is actually a letter that we put out to our community today. And one of the things that it's a common language in our community, which is called holding the bid. So if you could imagine, I'll pull that back up on the screen in a second. If you could imagine a stock goes up, so now order flow is pushing a stock up, and now we're reading the momentum of that order flow. And I'm sure everybody on the call right now understands Fibonacci levels and that kind of stuff. Before you buy a stock, you consider kind of those things. But we kind of take it a step further when we're in the program. You're pushing it up and you're pausing. You'll hear me talk about that quite a bit, a push and a pause. But what we don't talk about a lot specifically here is how deep was that pause? Did the push and the pause go sideways? Did the push and the pause come back? If the push and the pause came back, how far did it come back? That's kind of where Fibonacci levels come in. So when a stock is holding the bid, that's implying that order flow is still under that market, holding it up. So they're not allowing it to go down. Even if it goes up and goes sideways, that's actually a better picture of the tape because it goes up and goes this way and it's unable to come back down. So if you could visualize smart money, deep pockets, buying that stock, that means that they have further orders there holding that stock up. They're not allowing it to pull back. So I'm going to pull this back up and I want you to keep that visualization in mind. Okay. So the bulls are stepping in. So the question that we're bringing up right now is consecutive rallies into the close are starting to look more like short covering than fresh buying. So this is a really important context to understand. What's the difference between the two? Short covering means traders are buying stock to exit short positions. That means this is a one-time transaction because they're closing the trade. The trade is done. So if we zoom on over to the last 5 days of the market and look at the hourly chart, this opportunity for active traders, whether it's a short-term swing trade or a super active day trade, or not even super active, but there's been higher openings, push down, push down, push down, push down, push down. But when we've had rallies, we opened lower again. So you can see here the bid has not been under the market. So that essentially means that we are talking about short covering for the exact reason that we just mentioned. The trade is done. Okay, the trade is done. It pushed up and it's done. So short covering is typically faster to the upside because you're panicking to get out of the trade. Fresh buying starts a new position. That means the trade is not done. The expectation of higher prices. When the smart money, again, I just told you about, holds the bid, that means there's additional buy orders supporting the current price. So how does that translate into what we're looking at right now? Well, the futures and the market is down right now. So what does that mean? That means that these recent rallies that we've been having into the close for the last 2 days were short covering over the last 5 days of whoever was looking to short the market. They rallied up and they're coming right back down. They rallied up and came right back down. So if you remember what we said before, if you push up and hold the bid, there's more orders supporting that. if it goes up and pulls back, and again, if you saw that, you took a snapshot, we typically use the 50% retracement level to give us an idea when we're looking at Fibonacci levels. So how does that all translate into what is order flow and what is tape reading? First, the general number that I'm looking for is if it pushes up and pulls back and supports somewhere above the 50% retracement level, that tells me the previous order flow is still valid because they held the bid. Below that 50% level, I'm like, I'm not really interested right now. It pulled back too much. They didn't hold the bid high enough to tell me that the demand was still there. And that's kind of cool. So the fact that we went up on Wednesday and traded lower again, went up again on Thursday, and we're trading lower again now pre-market. Now, we don't know if it's going to stay there, but what it absolutely tells us is there's no orders holding that bid right now. So that leads us to believe there's short covering. When you add another element to that, and this is going to kind of really bring this home right now, is where we look at this. And we all know that when we're looking at classic technical analysis, where you push up and pause, you want those pauses to be on lighter volume. That means that nothing changed. That means that the tape has not changed. That means when you're looking under the hood, I don't know, again, I keep doing that. I don't know why I keep doing that. When you look under the hood, that you see pushes on good volume, you see pauses on light volume, which is just they're stepping off the gas, but nobody else is stepping up and selling, changing the tape. What we can see here over the last 5 days, and if you look at the arrow on the bottom, this is obviously a daily chart right now, they're heavier volume during the pause. Now, I'm not calling for reversal. I'm still bullish. I'm as bullish as the next person. However, what I want to get across to you, again, order flow and tape reading, this is the tape reading part of it. Everybody can agree. You know, John before typed in that the big three are still pointing up. They're definitely looking a little different, right? It's noticing that difference that makes you a trader. That's the key. And if you go back to the last part of what I put in that document, this is probably the first part's a lesson. The second part is trading versus chart reading, going the extra mile versus being lazy. And I'm going to show you something from our community as well. It's this last part. Okay. The smart play right now is lower initial share size, then look for feedback before you start to get your full position. This is a giant lesson for people to learn order flow and tape reading. Every trade is not the same. If you think every trade is the same, you don't have an edge. By that very definition, you don't have an edge. It's your job to determine how strong is the edge right now. Read the tape to determine how many shares you want right now. Should you have your full position size now to start the position out, or a decent size on your initial entry, or should your share size be lower? You're have a much lower risk exposure, and then you work into a full position when the feedback comes back that, okay, the tape definitely looked a little different, but it's still valid. So the fact that we're seeing a lot more down days on heavier volume, we're seeing opening lower, that means that the bid is not under the market. So we're still looking to trade, but I'm not looking to trade with bigger initial positions. So that's a mouthful, right? So I'm going to take that even a step further. When I say a conversation that we had yesterday in our community. Again, this is the kind of stuff that happens in our community every day. So Dustin, who's been doing a fantastic, fantastic job of game planning over the last month or so, actually, he really gets into the conversation where he's I don't show the chart here because that's in our private community, but he talks a lot about the depth of deeper stuff that he didn't even realize needed to be done. And this is, this is what I keep talking about with everybody every day. To take your trading to the next level, obviously the shortcut is to join me every day, right? But if you want to do trial and error and you want to do all that kind of stuff, it's imperative that you learn to make more distinctions. The more, and again, this is another one, like another posted pad moment. The more distinctions you could make, the more opportunities are going to open up to you. The more distinctions you could make, the more poor ideas you're going to stay away from. The more distinctions you can make between order flow and tape reading, you're going to know when to size up. You're going to know when to scale back. You're going to know when to exit into momentum. You're going to add when it pauses. So what Dustin mentions here, and I think the key is what Aldo posted on the bottom here in his reply, which, by the way, something that I think is just amazing. These are at 8:30 and 9:40 at night. That's what we do in the community. There's still conversations going on 10 o'clock at night. All right. So the point that I want to get across is this part by Aldo over here. Okay. It seems excessive until you start realizing how critical these steps are. Let that sink in for a second and ask yourself, how structured are you reading the order flow? How detailed is your tape reading? Do you ask yourself every time you look to put a trade on, what do I want to see? What don't I want to see? What do I want to see? What don't I want to see? It's a monster part of trading, and it's what separates somebody who is, look, I'm just going to say it straight up, who's lazy and not getting the extra work done and struggling and frustrated, and there's a big gap between where they are and where they want to be, versus somebody who is 7:30 in the morning. You're on this call with us right now, and God, I'm so grateful you know that. That's the difference. The trader who is watching these videos, the trader who is going to watch this video again, put me on pause and take notes, and that's where you're going to succeed. So Aldo wrote perfectly in the first. Awesome for Dustin for taking his stuff to the next level. And this is so key because I can't express this strongly enough. You're going to read something once. You're going to read it again. You see all the books, right? You're going to read it once and you think you're going to know it. You're not going to know it the first time you read it. You need to see it over and over and over again until it finally sinks in and action's on. We tell this to every single person who joins our boot camp. The number one thing we need to do first after order flow and tape reading is we need to see different market conditions to show you what that tape looks like so that you understand how to trade that particular condition. I use driving all the time, and I'm going to say it again because I think it's the perfect way to describe it. You're driving on open road. You're driving in stop and go traffic. You're driving in the rain. You're driving in the snow. All of that is the same thing with trading. So I want you to write this down, and I really want you to think hard about this over the weekend. If you think every situation is the same, where every trade you have the same risk, the same profit potential, that means you don't have an edge. That means you need to either learn an edge like mine. And again, if you want to learn about that, you can click down in the description. It says order flow, the New York method on there. Or what I would strongly suggest you do is lower your position size while you're trading real money to try and figure out what your edge is. Obviously, ours, I just described it as two simple steps, order flow and tape reading, but it needs to be simple. So if you right now are hesitating, you see an entry and you don't just put that trade on, you see an entry and you're like, no, maybe this time I got to cherry pick. The last one didn't work. Maybe this one's going to. That means you don't believe in your edge. Your edge literally means that every single time you put on a trade, you have to take that trade. It's super, super important. Okay. I can't stress this strongly enough. We actually have to head out into our other game plan meeting in a couple of minutes. Here's the thing I want to leave you with today. If you need help with this, you're obviously doing the right thing, but I want to challenge you. I want to challenge you in a way that I want you to get out of your comfort zone. You're obviously watching this right now. You have that burning desire inside of you. I actually had a conversation with one of my friends, Lou, yesterday, who's having a little bit of a hard time right now. He's not a trader, but it really comes down to this. If you want a different result than you're getting right now, that means what you're doing is not working. So the first thing is you have to admit what you're doing right now is not working. And here's the biggest key that I didn't understand when I first started trading. You have to pay attention to feedback, and then you have to take different action. But the part of the trading that a lot of people get wrong is they continue to trade with the same amount of share size, which is excessive share size, no matter how much money you have in your trading account, because you don't have feedback yet. You know, every day we talk about earnings reports and which stocks to buy after earnings reports. They're reporting every 3 months to determine whether or not they're making money. And then other stuff happens in the business to decide, okay, I want to invest in that stock because it's doing well. It's showing revenue. So I'm going to ask you the question, would you invest in yourself right now based on your last 3 months of trading? If the answer comes back yes, great. Now you should be expanding your business. You should be looking at more positions. You should be expanding your share size. You understand and you're getting positive feedback. If you've spent time where you're banging your head against the wall, and I'll give you even a bigger depth to this conversation. If you've spent the last, let's say, month, because the last month, even August till now, has been a little bit challenging, over trading, not paying attention, and getting your head handed to you where you've lost a lot more money than you should, you're still not paying attention. I've been very upfront. I thought August was a challenging month to trade. A lot of breakouts failed. There were a few individual stocks that traded pretty well. But I'm okay with that happening because I'm playing the long game. And I hope you play the long game too, that if the market and the tape is not getting follow through, if it looks like it's changing, which we talk about that all the time, A potential change of trend is where most money goes to die. There's not even a question about that, because as it's going up and now it's chopping like this and it's not a move to the upside and not a confirmed trend the other way, when you don't recognize that, you continue to trade the same share size, that's where you lose too much money. If you, and again, I'll get back to myself, trading and recognizing that the tape is changing or it's not following through in the same way, you lower your position size, you lower your risk exposure, and then you wait for good feedback. So if you have losing days or even a losing week, it's so small, it's minuscule in the big picture, and then it only takes 1 or 2 good trades to make your entire month. That's real trading. So I'm challenging you again right now. If you're experiencing bigger losses right now than maybe you did a couple of months ago, if you still can't put that together, you're doing the right thing by watching these kinds of videos in the first place. But the second thing is you have to ask yourself, what is the fastest way to get out of that rut? What is the fastest way to do that? First way is obviously do it on your own. But the point I want to get across is lower your position size until you see a few months of consistent profit. If you want to learn how we do it, that's, of course, I'd love to see you on the other side in the boot camp. If not, ask questions. That's the point that I was really getting to. Leave comments below, like was done this morning, about order flow and tape reading, and that'll inspire future conversations about how to learn how to be a better trader. Obviously, the fastest way, in my opinion, is to join our community. Again, you see the kind of stuff that we have in our community here, just the most amazing, amazing people. And I know we have some awesome people here on YouTube and social media as well, and that's 100% amazing to me that we can share these types of conversations. 7:30 in the morning, 8 o'clock now, 30 minutes goes by like that. But this is the kind of thing that we do all day, every day. So I just want to leave you with this. Order flow and tape reading. Order flow is, should I be looking to buy? Answered by the question, is it obvious? And how long has it been obvious? The second part of tape reading is, should I buy now? And what is the profit potential if I decide to take risk right now? All of that kind of stuff is the difference between order flow and tape reading. Again, we just had 30 minutes together, okay? And this is obviously live. We're not watching charts. We're not walking through conditions. Every day, the first 90 minutes of the day, I literally go on audio and I'm broadcasting what I'm thinking about every single thing I'm seeing. So this is just a small snippet of what we actually do during the day. So I'm going to challenge you. What are you willing to invest in yourself? I know Finviz, I've spoken to you a few times. What are you waiting for, man? Get in there and get involved. Look, if you're on this call right now, and I'm just going to say this straight up because the same thing was said to me at one point. If you're here, the conflict hasn't been solved yet. There's still something you're missing. So what is it costing you to not solve that problem? We could talk about all the money that you would like to make, but what is it costing you to wait another week and wait another month, wait another 2 months to get started? I'm not hard pitching anybody. I'm asking you to look in the mirror. I'm asking you to look in the mirror. If you're watching these videos, you like the videos, click down and just go to the page and look at the New York method and see if you think it's for you. If not, then I'll challenge you. Answer questions down here and I'll get back to you as soon as I can. 2 other things to keep an eye on today. We got a really good question today about futures contracts expiring, and it's a really good question. So for those of you that don't know, who only trade stocks, futures contracts expire. Some expire monthly. Today is quadruple witching. Actually, you know what? Do a search today on, today's actually triple witching, not quadruple witching. Do a search on that and you'll see what that means for today's trading. But the futures contracts, now we have a distinction between the September contract and the December contract in the E-mini S&Ps. And we had a question today asking, how do you know, but Mark Cook actually asked in our community, how do you know which one when is one ending and when do you switch out to the next one? And generally speaking, you look at the 2 contracts and you see where the volume is going now. Typically, the newer contract, in this case, September is winding down, and we start looking at the December contract of the S&P futures. You'll see the volume start to spike in the December contract, so you stop watching the September contract, okay? And if you, oh, by the way, if you want to learn a little bit more about futures, there's a PDF below. If you watch the webinar that we had the other night, there's a PDF of the transcript of the Q&A session. So there's a lot to do right now. So it's Friday. We got a big day of trading ahead. The market's down right now. Is it going to rally? No really big numbers coming out at 8:30. I just want you to know how much I appreciate that you're here with me. It means a lot because I was in your shoes. And quite frankly, there's a higher level for everybody else. But I was in your shoes where you're looking for more answers. I want to tell you this. The simpler you keep it. We have somebody in our community named Mo who had made a comment the other day about whether what we do is quote unquote advanced or not complicated enough. It doesn't need to be complicated. It just needs to be something that you deeply believe in so that you don't hesitate. And quite frankly, the only way to really deeply believe it is to trade and get feedback. And you know how you'll know it works? You're actually making money. So if you're not making money, something you're doing right now changes. I hope that you understand what we talked about today. We just kind of like scratched the surface of order flow and tape reading. Then there's obviously what happens between entry and exit and all that other kind of stuff. So I want you to know how much I appreciate you're here with me today, because it means a lot. You woke up early, you are here, and that means that there's a desire inside of you to get to the next level, right? I hope you joined us in the boot camp. We have the most amazing community. If you want to stay here on social media, I'm also super grateful that we're here doing that. So let's call it a meeting. I have to get ready for our game plan meeting, which starts in a little bit. Have an awesome, awesome day of trading. I strongly recommend you watch this video a couple of times because we covered some pretty good stuff today. Click the link below to learn about the New York method, and have an awesome day. Have a safe weekend, and I'll speak to everybody soon. Thank you so much.